September is here. Can you believe it's September already? And you're wondering, Eric, what stock should I buy now? Now, we've had 5 days of selling, especially in growth stocks, since Jerome Powell spoke last Friday. We're going into a holiday weekend here. I want to bring you a quick video to give you 5 growth-related stocks that you can focus on at these levels and lower. Now, of course, we always teach dollar cost averaging. We teach long-term investing. If you're looking for trades, it's tough right now. The environment's not an easy environment. I just made a video recently talking about the QQQ, saying 293 is the next stop. But guys, again, the QQQ right now, the next support line, if it breaks this 300 area, you're looking at $293, could always go lower. We hit that today and we bounced off of it, so hopefully that video might have helped so you didn't chase anything before we had this drop here. So we're gonna get into 5 stocks. Let's get started. Now again, guys, we're thinking long-term here. Palantir is the first stock. These are not in any particular order, and you might say, oh, this is a meme stock, this is no good, the environment's not right. This is getting close to a 6 EV NTM revenue when we get under $7. So right now it's at $7.41. I like this thing if it gets $7 or lower. Even where it's at right now, if you look at it, it was a $9 stock at the end of 2020. Of course, it was expensive. It ran really hard. But if you're thinking long-term, you look at the growth prospects, this company has a lot going for it. It really does. And I've got several videos on the channel. If you want to explore more and learn more about Palantir, you can check those out. But you can see this stock was $29.29 back September of 2021. The low was May 12th of $6.44. So we're about $1 off the low there. Of course, this doesn't have a PE ratio. You're going to be looking at more of a cloud SaaS name. So we're looking at that EV NTM revenue, which is right now maybe 6.5. And again, if we get below $7, getting closer to 6, I think it's attractive in that area, especially if you dollar cost average here and lower. Next stock is Tesla. Now they just did the split, so it's $272 a share. It was just closer to $1,000. It's come back quite a bit. You can see if you look at the high, November 4th, 2021, $414. The low is May 24th, equivalent to 206. So this is significantly off of those lows. I think it has a lot going for it, especially when you think of the Inflation Reduction Act and a lot of those clean energy stocks. I think Tesla's going to do well. In fact, Tesla competes with some of your favorite names. When you think of like STEM, for example, they actually compete in that area, and I'm still working on a deep dive on STEM, and I'm going to get that to you. But I really do think that Tesla is a conglomerate for green energy, for clean energy. I think it'll do well longer term. Now you're going to say, wait a minute, I saw legislation, $55,000 is the max for the tax credits. $55,000 is the max for EV. That is true. What I think Tesla will do is I think they're going to sell a stripped down model that's going to allow them to get under that price point to take advantage of those tax credits. You know that Elon Musk is already looking at that right now. I can assure you of that. And when you think of Tesla, it's not just electric vehicles. So many people just think of them as electric vehicles and they say, oh, it's just a car manufacturer. It's much more than that. It's an artificial intelligence company. They're trying to make robots, right? But more than that, when you think about this legislation, energy storage is going to be big. You think of solar, you think of energy storage, solar, you think of charging stations, more on that here in a second. But look at energy storage deployments. So these decreased 11% year over year. Now that's mainly due to semiconductor challenges. I think it's going to ramp up, and I think this bill could help stimulate some of that. You also have to look at solar. Solar increased by 25% year over year in this last quarter. Our solar installation team continues to improve installation efficiency, enabling higher volumes and stronger economics. You can see solar deployments are ramping up here. Another key part here, guys, is the supercharger business. Check this out. To help accelerate the transition to sustainable energy even faster, we're excited to open up our global fast-growing network to other EV customers. So White House, Tesla to expand its US supercharger network to other EVs in late 2022. And people are going to say, wait a minute, what about ChargePoint? But I'd rather own Tesla. It's basically a clean energy conglomerate that has EVs, that has energy storage, that has solar, and has superchargers. The US government said in April it needs to increase its own network. They have 1,100 charging stations. They want to increase it by 100-fold to meet demand. And Tesla's ramping up trying to help meet that demand. Later this year, Tesla will begin production of new supercharger equipment that will enable non-Tesla EV drivers in North America to use superchargers. This is huge. I understand a lot of people don't like the stock. It's a cult stock, kind of 99.25 P ratio. So it is an expensive stock. You know, buy at your own risk type of a thing. But I do think if this gets lower, my target would be $265 or less dollar cost average. I've been in this stock for a while and I'm up on it pretty nicely. But if I didn't have a position or if I'm looking at dollar cost average into it, you know, especially if you get the 250 under, it might not get that low, but 265 or under, dollar cost average, Tesla. Another stock that actually just did a stock split recently, Alphabet, Google. Now I like the A shares, that's GOOGL. You can also buy C shares, which is GOOG. It's really just voting rights. It's up to you. I prefer the A shares, the GOOGL. And you can see this topped out $151 actually this year, February 2nd, 2022. The low is May 24th. It didn't break 100. I got real close, $101.88. So it's really been trading this range for quite a while. If you look at this, it shows a 20P ratio, 20.14P ratio, which I think when you're looking for a growth stock, this is a value type growth name. It's growth at a reasonable price. I think they have a lot going for them. I did a video recently here on Google, talked about some of the areas that you might not know very well, like Waymo and some of their AI and robotics features they're working on, different segments of their business. I think Google is going to continue to do well. One thing to note is the head of YouTube just recently left, so there could be some issues maybe there we don't know about. So keep that in mind. But I just look at this company. I look at the price to earnings ratio. I look at what you get for $108 a share. So if you can dollar cost average, between 108 and 101, I mean, that's a pretty tight range. I think this is a great long-term investment. Now I've got two more stock picks here. Before I get into those, I was buying pretty heavily this morning, both in the Fired Up Wealth community portfolio as well as my main taxable brokerage. If you want to see what I'm buying and selling in real time, you can join our Discord community. It's a great time to join us right now. New month, September. So that's just going to be patreon.com/Fired Up Wealth. You can join us there, check out the different tiers. And we're also partnered with the Motley Fool. Now we're independent. So in other words, they don't tell us what to make, what videos to discuss or to cover. But we do have a partnership with Motley Fool. They bring great stock ideas for you to explore, do your own due diligence, make your own decisions. And if you want to see the 10 best stocks to buy now by the Motley Fool, visit fool.com/Fired Up Wealth, and you can check those out. Now, this next stock has had a rough time over the last several years. In fact, at $150, you go back to 2018 prices, I believe. So Salesforce has been pretty beat up. They just reported earnings. They were kind of lackluster. The P ratio is a 291, and this is where it gets really complicated because when you look at the EV/NCM revenue and you compare it to SaaS, it still has that Rule of 40 component. It's still doing pretty well. Now, if you look at Google, we covered earlier, it's a 20P ratio. This is a 291. So if I was going to buy one of the stocks over the other, it'd probably be Google. But I do like Salesforce as a long-term investment. If you watch my top 20 cloud stocks, you'll know that this was on that list, and I do have high conviction in this company longer term. The Slack growth was around, I think, 35% this last quarter. And overall, the company is doing very well, but it's still expensive. It's one of those, it's in no man's land. It's not hyper growth, so you can't really give it a huge EV/NCM revenue multiple. So it's not a value stock because it's still a 291P ratio. You look at Tesla at 100P ratio. So this could go lower. I think it's $135 to $150 cost average. When I look at the charts, I see it going as low as $135. So keep that in mind. The low actually was today, $150.87. The high was $311.75 on November 9th, 2021. So could it bottom out at 150? Maybe, but definitely could go lower. I like this stock, 150 range and lower. So for the fifth pick, I'm going to give you a semiconductor name. Now, I think there are a lot of semiconductors that are attractive at these levels and lower. They've been beat up really hard. And I was buying some semiconductors this morning. This one here, I'm not buying because I have a full position on. I do like this stock. Now, we had some news this morning, basically saying that some of the vendors couldn't supply to China. And that caused semiconductors to sell off even more. We had kind of a perfect storm. So the fifth day in a row here of selling, and it really brought the market down. It brought a lot of semis lower. Now, with semiconductors, the interesting thing about it is AMD came out and said that they don't see a significant impact from this China news. Okay, so they might have to get some licenses, but they don't see any revenue impact like their primary competitor, right? So when you look at this, the 52-week range, it did bottom out July 5th at 71.60. Today it did get down to $78. I think this is attractive under $80. So I'd be looking at, the $75, $80 range. Maybe it gets back to $71.60, the previous low. Could even go lower, but I look at the growth trajectory of this. I look at data center, the Xilinx acquisition. I like AMD long, anything $80 or less, dollar cost average, accumulate for long-term investors. I just released a Real Talk video here on Tuesday. If you've not seen that, go check this card out. Go watch that video. It's 16 minutes, me talking to the camera, talking to you, trying to help you as a long-term investor. And if you have not watched that, most people in the community will tell you these are the best videos that we do on the channel. I encourage you, go watch that video in its entire duration. I appreciate your time and attention. Hope you have a great rest of your day. Take care.